In this video, we're going to talk about backtesting strategies, backtesting bots. Specifically, we're going to talk about our moving average crossover from our previous video. And we're going to talk about the importance of backtesting, historical data, and why you need to backtest, all the things. So let's go ahead and get started. So we're going to go here into our NinjaTrader Control Center, and we're going to go to New Strategy Analyzer. And you get a window that looks like this. At the top right here, we're going to go ahead and choose Backtest. And you'll recall that in our previous version, we're talking about the sample moving average crossover. Now, keep in mind here that we were using predefined 7 and 16, which was our slow and fast moving average crossovers for signals of when to get in, when to get out, when to flip directions. And then you'll recall that we were using a 75-minute chart. That was the value of our chart. And then we were trading the MNQ December 24 contract. And our start date, what we call our testing period here, was about 90 days, give or take. So 7/15 to 7/25. Now, the thing I want to make sure everyone understands here is that any one of these inputs on the right, let's say I change this to a 6, and you'll watch this number when I rerun it, it's going to go down. You guys see that? So the question is, how did I choose 7 and 16, right? Why not 8 and 14? Well, we can change and try and test all of those. However, we'll get into it in a minute, but I have tools that help tell me what are the optimal or optimized strategies. In this case, 7 and 16 gets us back to our 8406. Now, for those of you who've traded futures before, MNQ, of course, is our micro NQ contract. However, we also can just go into our futures and trade NQ. So not the MNQ, but just the NQ. And you'll notice we get a very different kind of result here, right? So trading one contract would have been a gain of $84,000 with a 12,665 drawdown. Now, you're like, Matt, why don't you just use that? And if we look at our trades, everything's using a single contract. Well, that is definitely possible. That is definitely feasible. You can certainly do that. However, we want to trade MNQ, and you'll notice our drawdown is about a tenth, right? So tenth. So think of it like you add a 0 onto the end of all of these numbers when you are using the NQ, right? So it's kind of like I would say MNQ to NQ relationship is about a 10 to 1, 10 to 1, okay? Now, there are reasons why I would sometimes use one over the other. Obviously, if I'm trading 10 in MNQ, the commission on that would be significantly more than one NQ contract, right? So the commissions is like per unit, so 10 units versus 1 unit. However, in this case, I'm using one of these, and I can easily scale that up or down based on how much risk I'm willing to take, some of the things that I'm willing to accept, one of which could be, I could say, hey, I want to trade 4, right? And you'll notice this goes up to 4, and you'll notice here that our net profit, gross loss, gross profit, all these things, all my wins minus all my losses with a net amount up here, and then my max drawdown. Now, keep in mind, of course, that as you add contracts, it's pretty much going to give you the same exact number, but with times 4, right? If you're going from 1 to 4. Now, keep in mind when I look at the analysis here, what you'll notice is this bottom left to top right. We kind of want that kind of a movement. We don't ever really want to see like a humongous win and then a whole bunch of slowly giving back, which just basically means, hey, you had one amazing win and then you're just losing, and you really don't want that. What you want is kind of the slow, kind of consistent grind higher. Now, you will also know, of course, that in some of this, you hit a peak right here, then you had a few losses, and then you kind of dug your way out of that, kind of made a new high, same thing, pulled back. And so that's very, very common. Don't be afraid of that. Don't try to tippy toe or jimmy around that. It is what it is. That is part of the process. Now, again, the bottom left to top right. Now, what you'll also notice what this back test can do is it can also show us days of the week. which means, as you know, we get in every single trade and get out at the end of the day. Mondays is here, Tuesday, Wednesday, Thursday, and Friday. So if I had to pick 2 or 3 days that work really, really well, I would probably pick these right here, right? Tuesday, Wednesday, Thursday. And I have the ability, if not in this exact bot, but the ones that we work with, you have the ability to turn off Monday and Friday. And imagine finding something else, hypothetically, that looks like this to run over here on a Monday. That would be a huge difference maker, right? Now, again, the bots that we're using in this exact example, the sample moving average crossover here, which is very different than the bots that my company has built. We've built quite a few other bots that we run ourselves, but for this example, the sample moving average crossover, you can see all the net profit, the gains, the losses, not only visually here on this lower chart, but also the trades here, 20 trades, 22, right? You can kind of see that through our testing period. The other thing you can do is you can also look at kind of like a weekly. What does this look like weekly? Imagine getting to the end of the week and you're like, yeah, I made money, yay, right? And this kind of helps you get some expectations that now having two losing weeks in a row after having some pretty killer gains, most of you would probably be okay with that, right? Probably, if you're being honest. However, what if you started right here, and you quit and you gave up? You're like, Matt, I lost money following your advice, right? But I will tell you that if you stick with it, if you're following the rules, your account should be growing over time. Now, keep in mind, you don't have to win every single time. You have to win over time. That is a huge difference. And of course, what happened in this, in this week right here, where everything was amazing, getting some huge gains? And the answer is you did absolutely nothing different, right? Which just means that the market was very, very cooperative. The strategy you were using was very cooperative. Unlike in this case, the strategy the market was not cooperative, right? You had some chop. And I don't know about you, but I would take lots of these kind of arrangements where I'll take a huge winning month and a couple, lousy months, or sorry, weeks, a huge week followed by some, lower returns and then some lousy weeks. I'll take those all day, every day, right? Now you're like, Matt, all I want to do is win, 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 no matter what. Well, that sounds like a song. And in this case, we're going to look at the trades. In this case, we have four. We're trading 4 contracts. Now, the thing I want you guys to always keep in mind is anything I adjust over here on the left will absolutely change anything over here on the right. So sorry, I said backwards. Anything on the right, any changes here, anything is going to change and adjust what we have over here on the left side. You guys believe me? Now, what happens if I go from 7/15 to October? Let's just say the end of October, right? So I'm giving it basically, another 6, 7 days to trade. And we're currently at 33,624. Now, when I rerun that, you'll see we went from 33.4, right, is what it was. And it has increased 37 to 36. So what does that mean? Well, that means we had some wins. Over adding an additional period has added some additional wins. If you go look at the trades that happened after the 25th, you'll see here, here we are, here's the 24th, and here we go, we had 3 winning trades, adding up to a little about $3,500, right? These 3 trades added up. Now, obviously, if you close right here and you didn't capture any of these wins, you would have slightly less gains. You still had gains, but slightly less, right? So as we see when we added that, you'll remember our previous testing period was the 25th. Now, what I want you guys to notice is because we had 95 trades, 47.37. When I go back and add the remaining part of October in my previous video, the month wasn't over. The month hadn't ended. So as I click run again, you'll see a couple more 3 winning trades. And then our percentage profitable has now gone up. All the other things here were still 57.14, 40.82. Those also did change ever so slightly. Again, anything you adjust on the right will absolutely affect everything on the left. Now, the importance of this, the thing that we're looking for, number one, is I really want this number. If you're using a funded account, And let's say something like Apex Trader Funding. They do currently have a coupon code, which I will put in the description if you want to sign up for that. But the coupon, I think, is 80% off. But imagine spending, I don't know, $40 a month to get a 300K account. Okay. For the 300K account, I have to grow it. I think it's roughly like 8%. So I got to add 20K of profits. Okay. 20K. Now, I can't lose more than 7,500, 7.5K. Now, obviously, when I'm running this back test, I need to know, does this meet my criteria for the account size, 300K, that I want? And the answer is yes. Obviously, right here, our max drawdown never gets to a negative 7,500. I always wonder why they don't show a negative number here, but they showed the parentheses. So negative $5,000 and change. And then we need our goal to be 20K plus. Would you guys agree that our our net profit was 20K plus? Yes, it was. Absolutely. So does this meet our requirements? Yes. But there's a few things that I also look at, and I want my profit factor greater than 2.0. Okay. Now, keep in mind, if you've been a bot trader for anything more than a few months, you will have run hundreds of back tests. You will have changed and adjusted and played with all these variables, all these inputs, all the dates, which I really recommend the dates, by the way, that you really focus on the most recent 90 days. So in this case, I can kind of update this to basically run for August, September, and October if I wanted to, right? I'm currently kind of grabbing 2 weeks of July also. So it's basically what, 12, 13 weeks, something like that, 14 weeks. So, so for any of you fishermen who have looked at what you've caught and you're like, I need to decide what is my criteria to keep or discard my catch, my findings. In this case, it was a back test report, right? What do I want to keep? What do I want to discard? Again, these are the criteria I'm looking for. And ideally, I want this number, of course, in my example, to be below 7,500 if I'm using a 300K account. If I'm using a 300K account, again, I have to grow that plus 20K. You guys can agree this definitely went beyond that, right? So 300K. But what happens if I'm trading a 25K account? Well, I would have to really adjust and adapt to whatever the rules are for a much smaller account. Okay. Now, obviously, I can go in here and I can adjust the quantity here and go back down to a single contract instead of 4, rerun it, boom. Now I'm back to this amount. Okay. Now a 25K account needs to grow 2.5K is the goal, but you can't lose any more than minus 2.5K. Okay. So plus 2.5K minus 2. You guys agree this meets my criteria. Again, profit factor greater than 2. So if you're to look at this objectively, you would say yes, yes, yes. Now, there are some things that in this simplified bot we're not able to do. And that is ideally, I want this greater than 70%. However, I can't control the risk variables. All I can control is the quantity. So it's kind of a fixed quantity variable risk. We do prefer, I typically prefer kind of a fixed risk where I'm deciding how much I want to lose if I'm wrong, right? So imagine losing $500, you're wrong, but making 750 if you are right, right? You guys can agree that that is a ratio, right? This is kind of like a 1.5. We'll call that R standing for risk unit. Again, in this bot, in this exact simplified back test, in this strategy, it doesn't control risk. It just always buys one contract across the board, no matter what, in and out, long, short, all of that. And in this case, 48.98%, and it does kind of meet our criteria. Again, profit factor above 2.0. Now, we talked about this in a previous video, but basically the profit factor is how much did I win divided, imagine that's a divisible, 16,300 and change divided by 7,000, right? You guys can agree that that is a ratio greater than 2.0, and that's how we get that formula. That is the exact formula, the ratio for our profit factor, okay? Now let's talk about some of the other lesser known variables that you're able to control here on the right, which is our historical fill processing. Now you do have a couple options. One is standard, which when you run it, it just pretty much just gives you a quick pass through. If you go to high, you can do choice of a minute, a tick, or a second. A tick is going to be a single tick. That is how real-time rates and actual orders are filled based on every tick. Basically, every time an order is placed or a price changes, if you've ever watched the stock market or futures market, tick up a penny, down a penny, or in the futures, it ticks up 25 cents, down 25 cents. Those are all ticks, right? And you can run it on a super granular level, meaning I want to fine tune this. I want to do this kind of a slow and methodical. And that would basically be a one tick. So just as a recap, a 1 minute is going to be your fastest, we'll say less accurate back test. Now, you don't want a back test that lies to you and tells you you're pretty. What what you want is you want a back test that is accurate, right? So 1 second is kind of we'll call it mid level. And then finally you'll see one tick is slow and thorough. So it's going to take all those trades and kind of go through them one tick at a time. Very, very fine tooth comb, but it will be slow and thorough. So my preferred method to do this is run it on a 1 minute, find something you like, and then run it one more time before you decide to go live on a one tick, so that you're kind of sifting and sorting through a whole bunch of back tests. You're sifting through them based on a specific kind of like a quick pass through. However, once you find something you like, you can kind of rerun it on a one tick. There we go. So that probably took about a minute and a half or so to run. And you'll notice our results are just a little bit different when we do the one tick, when we do that slow and thorough approach. A little bit less. Now, just as a quick reminder, I'm going to go back to 1 minute, run it real quick, and you notice it has some more gains. Now, what's the difference? Well, the difference is that our back test, there might be some very, very specific and exact trades where a price action might come down to a certain level. It buys, and just the price action kisses where we want to buy, right? It just barely kisses that level. Well, with a one tick, it may be discovered that it didn't actually kiss that level, or it came close, but it was just for a millisecond. And you never got into the trade. Maybe the price action continued higher and you weren't actually in the trade itself. But if I run a one tick, it's a much more thorough way to kind of resolve, did we get into the trade? Did we not get into the trade? And no, there's really no assumptions left. It is very much slow and thorough. Now, the other thing I want to show you guys is, we'll go back to 1 minute, is not only is this M and Q, but if I wanted to, I could also go into micros, and I want to select all micros. So not just this, but everything micro related. So MES, MNQ, all the micros. And I can run this quickly. And what you'll notice is it's actually running an iteration of 22 back tests, 22, not just one. So it's going to basically take all my settings and loop through and cycle through every single back test. It's going to look at every single asset class. And up at the top, there'll be a little section up here, which you'll see in a sec, which basically gives me my results. Now, in the bottom here, I can tell it I want to, there you go, boom. So I'm going to sort based on performance. There we go. And you'll see that the FSXE has slightly different performance. If you're to look at just total profit, it's showing my combined results is a little bit better, meaning I ran everything all at once. But if you were to pick just a single asset by itself, you'll notice here that our total net profit here, the 65.57, which is MNQ, is still kind of our highest or best result so far. And again, I can right click over that, go open that in a single strategy analyzer tab by itself. And now I'm able to kind of look at this just by itself. Okay. Now, what we just did, where we're running it across a whole bunch of, a whole bunch of assets, is this is what I refer to as a bucket test. We're running a bucket test. And all I'm really doing is I'm hard coding every single variable. And the only thing we're shifting and kind of changing is the asset class itself, or the asset itself. So we're doing all micros, but here's a list. So you have some treasuries in here. You have some currencies mixed in here. You have crude oil. You have gold. MGC's gold. You have MNQ, MYM, right? You have a lot of different asset classes all mixed in here. And I basically choose select all. And that's where it'll show micros. And that's where we kind of loop through 22 different back tests all at once. Not one at a time, but all at once. And so what this does is it gives us the ability to look across a whole bunch of assets all at once to give us our results to see, hey, is there something that kind of beats our current, running scenario, right? Is there anything that does better than what we're currently looking at? And it looks like the answer is no, not really, right? So instead of doing, oops, I want to do, let's do it this way. Oops, there we go. So what you'll realize here once you've run quite a few of these and looking at the settings that we're using exactly, if you want to match up in your own exact example, make sure that you have everything matching exactly. The thing about breaking at the end of the day means we're going to go to cash at the end of the day. We're basically not going to hold anything overnight from one trading session to the other. And what we're going to do is just go back to cash, so that's because that's one of the rules of the Apex Trader funding program. You can't hold overnight. So that's what we're going to do. And yes, we may have been able to get more or less return holding it multiple days as it's running in a certain direction. However, in this case, what we'll do is we're just going to exit at the end of the day, go to cash, and wait for the next trigger. And again, as we look at our summary here, in this case, we got 93.01. Again, if I was to use maybe a 1 second chart, I might get slightly different results, or go to one tick, again, slightly different results. Keep in mind, this is a 75-minute chart, and looking at every single second of data over the course of, in this case, what, about 14 weeks is going to take a little bit of time. It's going to be the slowest on the one tick. There we go. But here's the reason why back tests matter. Before I try any strategy, anything, I don't care if the world's greatest trader shared it with me, I want to see these kind of stats and statistics before I ever put real money to it. I want a report of how well does this work in different trading environments, different sessions, different time frames. In this case, what if I was told to run it on a 5-minute chart? It may not work as well, right? If I was to go to a 5-minute chart, rerun it, let's see what happens. You guys think it's better or worse? Well, way worse. Well, you'll notice that I had $412 of profit, but I took 1,500 trades. My profitability is terrible and my profit factor is pitiful, right? So how do I know what to trade? How do I know what settings to use? And the answer is your back test. Now, I used to be CEO of a software company for many, many years. And in 2008, my company was hired. Google hired us, and actually Amazon the very next year in 2009 hired us, took us out to their campus in outside Palo Alto, California. And the thing that we learned from Google's team is this idea of using data-driven decision making or data-driven analysis. The idea here is we don't fall in love with anything. What we want is the data or the results of our back tests to guide our hands on what to use, what to test. And of course, before any of these classes, I did kind of run a few things to kind of speed it up, so we have some idea of what to look at and focus on as we're going through our first few videos. So again, in this case, we have a 7 and a 16 fast and slow moving average. We're gonna look at our trades. These are just simple, chart on the trades on the chart. You'll see just simple moving averages. Again, at the end of the day, pretty much just going to cash at the end of the day, locking in gains, waiting for the next signal. And what you'll notice here is we did this kind of darker line here. It shows we exited at the close. And then guess what? We got in, waited for a trade. So during this period right here, we were not in any trade. We exited here, waited for the next day. And as you saw, this trended higher. So we didn't take any trades in this day right here between the 25th and the 26th. 0 trades. Why? Well, we had to exit here and it continued trending. However, we had to exit, right? So again, the idea here, the importance of back testing is that we're able to make decisions and get some statistical analysis, some probabilities. We can kind of set our expectations on what we can expect based on our historical back test. And as we wrap up here, just a quick review. We did talk about using the strategy analyzer. Again, the strategy and the bot are one and the same. So it's bot analyzer. Anytime you see a strategy, just think of it in terms of NinjaTrader 8, the bot analyzer or the strategy analyzer. We did talk about the historical data, the importance of testing periods, making sure you have enough trades. And then, of course, we did discuss the order fill resolution. Remember, we talked about the 1 minute, 1 second, 1 tick, kind of the variations and the things we can do, as well as the standard kind of advantages and disadvantages to each of those. We did talk about bucket testing. So you remember we ran a sample back test across all micros, not just M&Q. And then finally, we talked about the significance or the importance of back testing. In our next video, we're going to talk about risk management, how that is done, risk management 101. There's a whole bunch of different ways to manage risk. Most people jump right into how much money they want to make and where they want to live in the world and which islands they want to visit in Greece. Most people don't realize you really have to think about and manage your risk. That's one of the few things you can control in trading is managing your risk. How much you want to lose when you are wrong? How much you want to make when you're right, right? Those are all probabilities and statistics we're going to look at in our next session, as well as some of the common snafus for most bots using specific risk management strategies, kind of the advantages and disadvantage of each. So we'll see you in the next session.